The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. The 7-step daily routine for high performance traders is about developing daily routines and processes, building your headspace, your belief system, your mindset, and your daily habits to bulletproof yourself to master the markets. It's a free audio program. The links are in the description box below. They're both free downloads. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Another mindset reset and technical video reinforcing the same basic principles over and over and over again. The most important thing, I'll keep repeating, is to keep it simple. All markets only do 3 things. What's important about that understanding is that we can use that thesis to target high probability trade setup opportunities when they present on any instrument. Now, if you're following one instrument and you're looking to trade that, this still will help you target and understand the highest probability days. So days where, as Richard Dennis would say, you have to minimize your losses and try to preserve capital for those very few instances where you can make a lot in a very short period of time. What you can't afford to do is throw away your capital on suboptimal trades. And what my approach is based on is targeting those opportunities where markets are about to explode. Now, I talk about hunting shorting opportunities. I like to short markets. Essentially, it boils down to pump, coil, and dump, whether this is over the course of a week, whether this is over the course of 3 days, whether this is over the course of 3 sessions, Asia, London, New York. Now, that can be any combination of sessions because these signal days and setups can show up in Asia, London, or New York. Now, me trading New York, 90% of my trades come in New York. I do look for these opportunities in the Asian window. And the same approach applies in the long direction. But for simplicity, I'm looking for the same type of setup over and over and over again based on signal days. And what are those signals? Well, markets closing in breakout. So a market 4:59 New York time that closes in breakout outside of a previous daily range. That's a signal day. And when a market closes in breakout, whether it's a single day of breakout or multiple days of breakouts, that's a signal day. I'll bring that instrument up on my watch list. To me, that instrument is now in play. And we can have markets that evolve from breakouts into consolidations, and they will give us signal days at extremes. First red day, first green day, high of month levels, low of month levels, and the inside day. A market that has been in breakout, it's been in breakout, and then it goes into consolidation. It doesn't give a first red day or first green day signal. It gives an inside day signal, and that can be a pending sign of a reversal, or if we're at a monthly extreme, perhaps a new trending continuation, a market that explodes in breakout, consolidates, and continues the move. Now, I want traders to pay particular attention to my next statement, and that is a lot of traders are trying to trade markets before they even break out. They're trying to be in the breakout. I'm looking for markets that close in breakout. Now, I want traders to think of something really simple. I talk about front side of the week, back side of the week. Monday, Tuesday, Wednesday's the front side. Monday's our opening range, day 1. Tuesday, day 2 typically expands the range. So if one of these days closes in breakout, now it's on my list. I'm looking for the pump, coil, and dump opportunity. Wednesday, day 3, the midpoint range of the week. Thursday, I'm looking for the range reversal, the dump, pump, coil, and dump opportunity, because that can be the A plus, the A double plus, or the A triple plus high of week, low of week opportunity. And then Friday, of course, is the closing range. I'm looking for the scalable trade setups, the scalable parabolic opportunities. I'm following multiple markets. Ideally, I'll get at least 2 to 3 of these scalable opportunities a week. And then if I add Asia in, then of course I can go 2 to 4 scalable opportunities, ones where I almost can't lose. They're over quickly, they explode fast, and they're scalable in size, and they repeat over and over again. But the first signal I want to see from a market is either the inside day or a close in breakout. Now, as an example, we're going to look at the NASDAQ, and I want traders, again, your first piece of homework is to go back and walk through your daily charts. We went through an exercise in the last few videos. I'll keep repeating that, mark off the very first day of the trading month on any instrument and follow those instruments throughout the month. And go back to the reference that we just talked about. All markets, every single one of them, only do 3 things. Now, one instrument that gave us a signal was Monday closing in breakout. It closed in breakout. That brings that instrument now up on our watch list. Why? Because instruments in breakout will either succeed or fail. We had a double inside day that ended and began our new month. That market closed in breakout at the beginning of the new month. It was in breakout to the downside. And the gap level of the low of the breakout candle was 25,569. And again, I mentioned to traders marking off the major round numbers, the major quarter levels. We had 3 higher closes. The new month began, new timing cycle. That market broke down. But Monday gave us a signal day closing in breakout. That 25,500 level may be significant, but that's just a reference on major round numbers. But we have now Monday closing in breakout on the front side of our week. I'm going to keep repeating the theme here. Keep it simple. I'm not trying to read a market. I'm not trying to catch a move. I'm not trying to predict. I'm not trying to count pushes, sweeps, runs, draws, premiums, arrays, discounts. I'm looking for one setup. I'm looking for the pump, the coil, and the backside dump, the all-in opportunity, the A triple plus, the A double plus, or the A plus opportunity. Front side, we have market and breakout. Now, Monday closed in breakout, and we can just go back and look at our chart now. Friday is the closing range of the week, and we can project that level across. That's the low of week level. 25,500 may act as support. But I'm looking for the reversal setup, day 1, day 2, opening range, and initial balance. In a high percentage of cases, one of those extremes will tend to hold, meaning that the high or low of the week level established day 1, day 2 may hold as a ceiling or a floor. Simple understanding, if I'm hunting trade setups, I'm looking for either the range expansion opportunity or the range reversal, the all-in, the A triple plus, the A double plus, or the A plus opportunity. So we want markets to break out because those breakouts are either going to succeed or fail. And if I'm hunting reversals, I need these markets to break out. I'm not trying to catch the move in the breakout. I'm not trying to predict the move in the breakout. I'm waiting for the market to give me signal days. Day 1. Day 2 typically expands the range. Day 3, the midpoint range. And signal day. Do we have a signal on the NASDAQ? Well, Monday closed in breakout. That was our first signal. What did it break out of? It broke out of Friday's closing range high of day level. Wednesday now has closed below the open. That's a first red day signal. Let's go back to our little process, our daily process. We're hunting instruments that break out. Is it multiple days of breakouts already, or is it the first day in breakout? Then we have a first red day signal, page 58 in the playbook. We have a first red day. It has closed below the open. We can project the highest closing price of the week across. We can project Monday's U.S. session low across. That's where the pump began up top. So I use the phrase often, price is always in a box. We broke out again on Wednesday, and that breakout failed and reversed below the opening price. And heading into Thursday, on the back side of the week, we have a first red day signal. We're now on the back side of the week. How does price set up into our timing window headed into the New York session? Now, several traders have asked about timings, and I always refer to 9:30 New York Open and then the 10 a.m. club. 10 a.m. is the beginning of the new 4-hour rotation. But traders from the masterclass will recognize we have an early entry opportunity. Now, if traders don't trade that early opportunity, that's of their own discretion. That's entirely up to traders what they choose to do if they want to position themselves early in this opportunity. But other traders, once the market opens, we have our breakout now at the New York Open. Markets only do 3 things. All markets only do 3 things. So traders who want to get in at the open now are in the breakout. But if this breakout's going to succeed, it may pull back. And this is where the 10 a.m. club succeeds because they're patient. They allow the market to break out and run away. They know they'll get their pullback entry, the first bounce opportunity to re-enter an explosive market that is now potentially collapsing on the backside of the week. We have a market that's in breakout, and when New York opens, it's already in breakout. That breakout continues to the downside, pulling back into that high level from the New York Open and collapsing with zero stress, zero heat, now on the backside of the week. Traders understanding you can only trade in one direction. All time frames are driving that move. Our first target is low of week of Monday, the opening range. This is an ACB template. So let's go back right from the beginning. Friday closing range of the week is a pump. Monday closes in breakout. And just a simple understanding of trapping traders up high. Breaking out of Monday's high of day level set in the New York session, closing in breakout. We have trapped volume up top. Trap volume up top, day 1, day 2, day 3. So all of these 3 days are up top. They're caught up high. So when this market collapses, there's a high probability that it's not coming back. Another little simple understanding, that major round number acted as a level of resistance on the way down. So a simple understanding, we had 3 levels of rise: Friday, Monday, Tuesday, Wednesday. We have trap volume up high. The pump, the coil, heading into the backside off of our major round number level, the coiled up volume ready to explode. All time frames driving the move. The breakout into our New York session, the pullback, and the 10 a.m. club continuation. Zero stress, zero heat, zero thinking, an entry, a stop loss, and a hold till close. That's the scalable opportunity. And the continuation blow off on Friday, Asia, London blowing off to Friday's low of week level. And several traders took advantage of the Friday reversal trade from the low of week level into the timing window. We speak about keeping everything really simple: timings, levels, behavior of price. Now, I really encourage traders to think simple and keep everything simple. We repeat over and over again, there are only 2 setups, a buy setup or a sell setup. We want to be buying low if it's a buy setup. If Friday gives us the reversal setup opportunity, we've come off of a major level. We've just taken out the previous weekly low of week level. If we just bring this chart together, we can see that Monday's low of day level also got taken out. Now, these templates repeat over and over and over again on any instrument, on any market. But the first signal that we got that brought this instrument up on our watch list was a market closing in breakout. I'm looking for the same setups and signals over and over and over again. I'm not worried about blocks, gaps, sweeps, hunts, runs, soups, arrays, discounts, draws, imbalances, inversions. No, I'm looking for the pump and dump setup. And on Free Cash Friday, if there's a reversal or an explosive parabolic opportunity present, I'll hunt that one out too. Keep it simple. So for your homework, pick 2 or 3 of the instruments that you follow and go through your weekly template. Were there 3 session setups? Were there 3-day templates? Was there a weekly template? All markets do the same 3 things over and over and over again. The instrument is irrelevant, whether I'm going in the long direction or the short direction. Pump, coil, and dump, or dump, coil, and pump. Rinse and repeat, scale them up in size. Keep everything simple. Have a great weekend, traders. Enjoy your day, and may the markets go with you.